Guys, January was an exciting month. I got my ass handed to me on my Alibaba and Meta covered calls. I hit it 31 months in a row from the day I started of options profit every single month for 31 months. And I got completely smoked in January.
Because the rally was insane.
The rally was insane. So I'm going to pull up QQQ, which is the Nasdaq 100 ETF. 11.34%. It was up in the last 1 month. 11.34%. I believe our friend Cathie Wood had her best month, they said, ever. S&P was up 6.46%. Let's look up ARK. ARK up 32.3% and still overvalued like crazy.
Tesla was up 59.59%.
In January?
In the last 1 month.
Actually, the big jump of that was probably in the last 2 weeks of it.
Yep.
Go to the January 15th number. What's that? Right there. 122?
122.40.
So 50, oh wow, 40-some% of that.
Yep.
So guys, where are the markets right now? The markets are a little frothy. Michael Burry of the Big Short fame, he just put a tweet out yesterday, and all it said was this. You ready? This is all it said. That's all it said, guys, was sell.
It was pretty self-explanatory.
Now, our good friend Jim Cramer, and by good friend, I mean he's an idiot, he wrote, this is a bull market.
Bull market. And anytime that you get a type of pullback, buy the dip.
Yes.
Because we are in a new bull market.
So I give Jim Cramer, you know what? Jim Cramer gives me confidence that I always have job security. Because and Cathie Wood, if two people can be that stupid, that ignorant, that dumb, and make millions upon millions and millions of dollars, then anybody can. And I'll be able to. I just look at them going, God, they have no understanding of valuation. Today, Cathie Wood came out and said that disruption stocks will be $200 trillion industry. The current worldwide GDP is $100 trillion. She said by 2030?
So I don't know, and I can't read the article because this is a pro article that you need to pay for. So this is the type of brilliance that you get from CNBC Pro.
So let's look at this here. Cathie Wood.
That's an expensive subscription too.
$200 trillion.
What is the pro membership?
Is it?
I think so. Let me look this up.
But by 2030.
2030.
We'll soar 40% in value every year to over $200 trillion by 2030. Guys, here's the problem I have, and I said this on Twitter. The math doesn't even make sense. How can it grow 40% per year? I don't understand that. Like, that doesn't even make sense. How can those just those disruption stocks be $200 trillion? What's the entire world stock? I mean, it just doesn't. It's the same as saying Bitcoin can go up 20% a year. When you look at our video we did back in 2021, I don't remember who said it, but somebody said they thought Bitcoin was going to go up 19% per year forever. And I remember doing the math going, that means in 40 years, it's larger than the entire world economy.
I think I read today that Bitcoin is up the most it's been in the month of January since 2013. So Bitcoin is back, baby.
Bitcoin is back. Everything's back. Disruption's back. Bitcoin's back. Guys, so if you're new to the channel, we're value investors. I don't look at the prices of things. I do, but what I care more about is what is the price relative to the value? So as an example, this iPhone, I don't know what it was, $1,200. If I could buy this iPhone today for $100, I would sell my soul to buy as many as I could. If somebody offered this to me today for $2,000, I wouldn't touch it. If they offered it for $2,000, it didn't sell, then they lowered it to $1,500. That doesn't make it a good deal to me anymore.
Right.
It's still overpriced. It's still a $1,200 phone. And that's where we are when it comes to values. People will sit there and they'll look at a decrease in price and say, oh, look, it's on sale now. Well, it's less expensive now. I'll give you that. It is more reasonable of a value. Doesn't make it a reasonable value, though. Tiger Woods cheated on his wife 1 billion times. Let's say call it 200 times. If he went from 200 times down to 100, you don't say he's a good husband anymore. You just sit there and say, okay, he's less shitty of a husband. Great. More power to him. And by the way, I'm the biggest Tiger Woods fan of all time. I don't say it as a criticism. I say it as saying, let's go to an extreme. Let's go to relationships. If Tiger Woods cheats on his wife a lot less, it doesn't make him a good husband still, right? It just makes him a less shitty husband. Same with stocks. Just because a stock that's overpriced and crappy and shitty is down 40% doesn't make it a good deal.
Right.
Does not at all. You know, I'm going to do a separate video on this, but there are several companies, Intel, Cisco, Juniper Networks, which is down a lot today. They have yet to beat their 2000 high. Why? Because the valuations didn't make sense back then, and it took a long time. I wrote a tweet last night, or this morning, it was last night, where I said the Nasdaq peaked in March of 2000. I think the next time it hit that was 2016. If my numbers are accurate in terms of when the QQQ hit that. In that time frame, I said LeBron went from a sophomore in high school, went pro, went to the finals with Cleveland, left Cleveland, went to Miami, won 2 championships in Miami, came back to Cleveland, and won a finals for Cleveland, all in that time period. All in that time period. That's how long that is. It was 15 or 16 years before it finally saw the high. Why? Because valuations were out of whack. QQQ, the NASDAQ, hit a high of 16,000. Mm-hmm. I think it's going to take a long time before it hits that high again.
Yeah.
And surpasses that high.
Yeah, it took a time of great euphoria to push it there.
It took immense euphoria to push it there.
Immense euphoria, immense money going to people to push it up, to give them extra cash to push it up.
To play it like a video game.
Exactly.
So this is my stock market to GDP ratio. So if you're new to the channel, I show this a lot. If you're in our community, where's our community? If you're in our community, thousands of people, I post this every single day, the update. I post the exact update of where we stand. This goes back to 1929. This does not include dividends, but the average 10-year return is 6.6%. Makes sense. You add in historical average of 3 to 3.5% dividend, you're at 10% overall. Mm-hmm. Makes sense.
Yep.
When you're undervalued, the average has been 9.3. When you're overvalued, the average is 2.3. Also makes sense. The less you pay, the more you return in the future. The more you pay, the less you return in the future. When it's 30% overvalued or more, the average has been negative 0.1%. We are currently at 67.5% overvalued. Based on this, now, there are other metrics I've seen that make it a lot less overvalued, and I get that. That is the art of investing. Absolutely, I understand that completely. It is hard to determine exact value. We don't know the exact value, but what I can say is this tells me we're overvalued.
Yeah, it's so far an outlier.
You know, it's not like we're at 15% overvalued. We're like, maybe.
I could find a way to justify everything at 15%.
Absolutely. I mean, look at where we were. 15% overvalued was 2013.
Yeah.
Okay. Mm-hmm. Fine. But look at these long periods of, here's the other thing I looked at. In 1997, we were 16.6% overvalued. We got to a peak of 57% and back to even in a matter of 4 years. Look what's happened in the last 4 years here. We went from 44% overvalued to 67% overvalued. That's what makes me think that we have a long way to go here, because this euphoria has just kept getting worse and worse and worse. And the same euphoria that took it up is the same one that's going to take it down. Yep. Now, does that mean we're going to get to negative 80%? We're going to get to 80% undervalued? Not necessarily. It could be a longer period of time of just being undervalued.
I think Tesla was a pretty good example of that in the past 2 months, I guess, when it brought it really far down. Like, that's the type of negative euphoria you're going to see. Like, that was irrational to see Tesla fall that quickly for really no reason at all, other than, oh, Tesla price is falling, I'm going to sell. This person, I'm going to sell. And then that's the irrational euphoria to the downside.
Yeah, correct. And I agree with that. And I think that eventually, I've said this before, Bitcoin and Tesla to me will be the poster children of this bubble.
Yeah.
But we think that the time we'll see a bottoming in the market is when people have given up on
Ark, Tesla.
No.
Oh,
well,
Apple. Sorry.
Correct. Because Apple's kind of like, no, this is Apple. Mm-hmm. It's safe.
Yeah.
It's where you go. Warren Buffett likes it. But when people start giving up on Apple and you start seeing negative news about Apple's future, that is when I'll sit there and say, okay, we're probably getting pretty close to a bottom.
That's why I'm pretty excited to see their earnings tomorrow, because you're already seeing the negative stories about how their revenue is going to be declining for the first time in a while. Let's see if A, that happens, and B, if it sticks.
Right. So guys, if you like what we're talking about here, if you like I recommend you watch 4 or 5 of our other videos. We've done over 2,000 videos. They're wonderful. They're great. And we have our community of investors, because the most important part about investing is temperament. It's your emotion. It's not the stocks. So if you're interested in getting our software in our community, watch this next thing. If you notice, we have no YouTube ads because we want to focus on content and we want to keep it YouTube ad free. So we have our software. Check it out right now. For the next minute, I'm going to explain to you our software at everythingmoney.com and how you can use it to retire with more money than you thought possible. Do you get anxious every single time the market dips? Do you feel like maybe you're behind on your savings? Is it ever a worry that you may not have enough money to retire? If you've answered yes to any of these questions, then our software is absolutely perfect for you. With these easy-to-use tools and our community with thousands of other like-minded investors in there, you can use all of this to have better peace of mind and to understand why you are making the decisions you're making, because it's more about the emotion and temperament than it is about the numbers. And these tools, especially this community, will help you realize that and make better decisions going forward. You will absolutely be able to understand financial statements and impress your friends who still waste their money buying stocks based on their emotions and other hype people out there. So for a little over $1 per day, less than a cup of coffee, eliminate that fear from your life of worrying about your future financial state and your retirement savings, and try our software risk-free for 30 days. If you don't like it, email us, money back guarantee, no questions asked. Go to everythingmoney.com, sign up now, and change your financial future starting today. Back to our recap. Let's look at the Case-Shiller Home Price Index. Now, last year I made some videos where I said, listen, I'm not thoroughly convinced that home prices will go down. If inflation stays up, it could drive up home prices. Well, I was wrong. So look at home prices here. Home prices peaked in the June quarter of 2022 and have just started to come down. The most recent number came out for November because it's a little delayed at a home price index of 297, which is about 3% lower than its peak of 308. Okay, not insanely terrible. But going back to 1987, we've seen a few drops overall, but more or less, even during the bad times, the early 90s were a tough time in the economy. It's basically been flat. And then we saw euphoria and then drop and then euphoria back up again. And this 2020 and up has just been a crazy run up in prices. Mm-hmm. I'm currently remodeling my home. And the reason I thought that home prices would stay up was literally every single quote that comes in, I go, where the fuck did they get this number from?
Yeah.
It's been insane, Mo.
I know, even from Best Buy yesterday. Not even a remodel, just stuff.
It was, I'll tell everybody, I'm doing a home, Sonos system, TVs, etc. So I was like, let me have Best Buy and come out.
Honestly.
And Best Buy is supposed to be like the economical choice.
Yeah, I mean, a Sonos system and TVs, I mean, it's normal stuff. It's nothing out of the ordinary. It's not like you're putting in some crazy elaborate thing.
Yeah, their quote was $145,000. And I about shat myself. And I wrote back to the guy, I said, if this is really your quote, then this is a non-starter. Like, I'm not, it's not like I'm a TV, like, I'm not a TV and sound guy where I have to be walking everywhere. Like, it has to take effort for me to go, oh, let me turn the TV on, let me turn the music on. Mm-hmm. My fiance and I don't do this stuff at home. And I'm like, I'm not spending $145,000 for my TVs, my Sonos, and my internet in the house. Mm-hmm. It was ridiculous.
Yeah, that's insane.
Yeah. I mean, I could do it myself.
All prices are insane right now.
Yeah. So when it comes to home prices, guys, interest rates have kind of come down a little bit, but they're still up. It still affects people's buying it. But, I was looking at
this is just a little snippet, but it said total mortgage application volume fell 9% last week, even though interest rates are coming down.
Compared to the previous week.
Compared to the previous week, correct.
The average contract interest rate for 30-year fixed mortgage decreased to 6.19 from 6.2.
Yep.
But it peaked at like 7 point something, I think.
It did. So it's definitely lower than it was, 3 months ago.
Yeah. Big
time lower. But this time last year, 3.78 was.
And that was high.
Isn't that crazy? That was high. That's when people were like, "Ooh, I don't know if I want that mortgage."
I logged in today.
Not in the twos.
Lisa got her 1098 interest thing from her mortgage company. My fiance, she owns our house that we currently live in as we wait for our new one to be remodeled. And so I wanted to download it and send it to her. And it just said 2.625 interest. And I just shook my head.
It's crazy.
I was like, wow, 2.625.
That's crazy.
That is crazy.
It's not. It's basically free money. I mean, at that point.
It is free money.
It's free money at that point.
It is free money. Because look at it now. You can get 4.7% in 90-day treasury.
Exactly. And that could be going up later today. We could be at 4.8% by Friday on those 90 days.
Yeah. So, guys, the economy still feels good, but we are hearing more and more about more and more layoffs. But I want everybody to remember, no matter where the economy goes, even if it goes in a recession, things will get better. No matter how low stocks go, things will get better. I did a video where some idiot on Twitter said, for those of you who don't remember March of 2009, this feels a lot like it. Not at all close. Not at all close. I need to see people running for the hills. No one's running for the hills. Even Peloton is out there saying, hey, we're making strides. We're going to make a big, great comeback now. We haven't absolutely given up on so many things. That's what we need to get to. That's just the psychology of investing. In order to have good times for investing, we must get to a point where everybody says, I hate this stock or this market or whatever it is. And we're nowhere close to that. Not even close. Mark my words. Tag me in this video, sit there and say right below, this is not going to age well. And then I'm going to say, fine, we'll check it out. Because we're the same guys who talked about avoiding Nikola, Workhorse, and all the other stocks that are incredible. And the stocks that we do like that went down, that will continue to go down, we're going to buy more shares of. But if a company isn't fundamentally sound, we're going to avoid it until it does make sense. Like I looked at Peloton today saying, all right, great. Why are you laughing?
Because I looked at Peloton, and I think in the past year, it's up like 62, 63%, whatever it is. And the stock is like $12 and change. And I'm like, that's a far cry from 180.
Yeah.
Being up 62, 63%.
That idiot Russian guy on YouTube said you should buy, what do you say? Like, I've never been more confident in a stock, something like that. It's okay. Listen, I love buying 10 stocks that all go down 90%. Guys, follow the channel, subscribe. This will really change the way in which you look at investing. If you have a fear of money, you're fearful of seeing stocks go down, all the more reason you need to follow our channel. We will be the lifeline to you. We'll be the ones when stocks are down 40, 50% from here. Yes, I said that. We'll be the ones saying it's okay, it will get better. Just like we said the euphoria wouldn't last forever and things would fall, the same thing will happen on the downside. That will not last forever. Things will eventually go up. And we want you to be the investor who looks back at the chart 30 years from now and goes, thank God I bought in this year or whatever year it was. Yeah. So thanks very much. Subscribe to the channel. I appreciate your time.